when we were going through her liability, she said, that credit card balance is like double what it should be. And her credit card was stolen. And they had gone in and changed all of her notifications, like text notifications. She had no idea. So it's just good to be prepared. And like a lot of times people don't know if there's any kind of medical collections on there or if somebody's reporting them past due. So it's just good to have a plan. So yeah, if it's free, it doesn't cost anything. It costs like 10 minutes of your time.
Welcome to Kim and Jordan Unscripted,
a podcast where we talk about living in coastal North Carolina and real estate.
Today we have a special guest, Jordan Carter with Motto Mortgage.
Hey, I'm Jordan Carter, a mortgage broker at Secure Choice Motto Mortgage down in Southport. I've been a mortgage broker for about 15 years and I'm looking forward to today.
What made you want to become a mortgage broker?
I was a teller in college and I was doing summer school and I needed a job. So I reached out to the bank where I was working for and they said, we don't have a teller position, but you could be a mortgage assistant. And I was like, I don't even know what a mortgage is. But I learned quickly, and it was during 2008, 2009. So I learned really fast and I learned all about it very quickly. And then after I graduated, I became a full-time mortgage loan officer at that bank and stayed there up until about 2.5 years ago. I became a broker.
And that's when you got with Motto Mortgage? Mm-hmm. What brought you to Motto Mortgage?
One of the owners, Blakely Huntley, she used to work with me at the bank and I trusted her more than anything and her opinion. And she's like, look, there's way more options over here. You can do so many things that you can't do at a normal bank. And I think you should give it a shot. And I said, okay. Didn't think twice about it. So it's been the best decision.
Are those options, like when you say there's more options, mm-hmm. what does that mean?
So at a bank, I will say the similarities between a bank and the lenders that we use, they all follow your general rules, like Freddie and Fannie rules, right? But at a bank, they may have what's called an overlay. So they may have additional rules on top of Freddie and Fannie. So they may be limited to the products that they can offer, but these lenders they just go straight by the book. And they also have investment products, bank statement loans for self-employed people. We can still do construction loans. They just have more options available. Yeah.
In North Carolina, are there any options for people, like veterans they can qualify for a VA loan if they have an entitlement? Are there any programs where it's a low down payment assistance that are offered in North Carolina? Yeah,
so one of the main products that I use, and you can actually use it on a single family residence or a manufactured home that's brick underpinned. We have an FHA down payment assistance program. Usually FHA is 3.5% down, and this low down payment option, you can get a 3.5% second lien or even a 5% second lien. And a lot of times I recommend the 5% so they can use the 1.5% for the down payment and use the other 1.5% to buy down the rate or to cover some cost. So it's zero out of pocket. You don't have to be a first-time home buyer. And what's different about this program versus like an NC housing program, which I don't offer, is that you don't have to keep this as your primary for so many years.
Okay.
So like when I was at the bank, they offered like NC housing. They did a down payment assistance program, but with that, you have to keep it for a number of years as a primary. If you were to sell it, but in that time period, you could have to pay some stuff back or whatever. So with this, you don't have to do it. But I actually closed like 2 months ago a manufactured home. She didn't bring anything to the table.
That's awesome.
She paid for her appraisal out of pocket, but she didn't bring anything to the table. We also have a lender that's offering 1% down. That is income driven a little bit, and it's not, offered all the time. So we have to be careful with that. But the FHA, there's no income limit, and the credit score is forgiven too. And you can go up to 55% on the debt to income ratio, usually, if they have a decent credit score. So it's a very good program.
But with the FHA, they'll still have PMI.
Yep, they'll still have PMI. Anytime you don't put down 20%, you're going to have the PMI.
Okay.
Generally. So.
A lot of, and Kim and I were talking about this, with the rate buy downs. I feel like even realtors don't fully understand it all the time. Yeah. Can you do a quick overview of it?
So a buy down, a temporary buy down is when the seller offers like seller concessions, like, hey, I want to give you $5,000 to do what you please with. Sometimes you can offer like a 2-1 buy down, a 1-0 buy down, 1-1 buy down. And basically what a buy down does, it doesn't change the sales price, which is great for realtors, right? You keep your sales price. But what that does is allow the buyer to temporarily buy down the rate. So if they do a 2-1 buy down, they have it for 2 years and they buy it down. They need to have seller concessions, or otherwise it doesn't make sense, because they'll be spending their money to buy it down temporarily. That just doesn't make sense. But it gives the buyer a little bit of cushion the first few years being in there, and also they can refinance within that period. So if they do a 2-1 buy down and they want to refinance after a year, they will get credit for that year they didn't use. So it's a win-win for a buyer, and it's a win-win for the real estate agent because they're not lowering their sales price.
Well, I still think it's beneficial for all parties.
Yeah.
I've not seen it where somebody gets hurt because instead of lowering your price $5,000 to $10,000, we could offer that as a concession. It helps the buyer, especially in this market that we're in right now.
Yep, they'll get in the house. They have that cushion to like figure things out. We all think the rates are going to drop. We don't know, but we think. So that gives them that freedom to refinance if they want to, but if not, they're still at a lower payment for a little bit of time.
And in that time when they refinance, is it a free refinance?
No, we know refinance is free. They still have to pay closing costs, but there's ways we can do it that's pretty cheap.
Okay. So what about a permanent rate buy down? Is that just way more expensive?
It is just more expensive. It is. But you can absolutely do that too.
And with that, I've always heard that when you hit 1%, so say you buy it 7% interest rate, and when it drops to 6%, then it's worth refinancing.
Yes.
Is that true?
That's like the rule of thumb, but I also tell people now, credit card debt right now is at an all-time high. Everybody's carrying a lot of credit card debt, and those interest rates on credit cards are like what, 15, 20%?
No, I think they're like closer to 30.
Or 30, yeah. So I always tell people, like, you have to do what makes sense to you. Okay, if it's not a full percent, okay, maybe it's like 0.5%, but you need to take care of some of this debt and consolidate it and get it down to 6.5% versus 30. And you could save up, $600 a month doing that or whatever. You need to just look at the full picture. So yes, generally while you're no cash out, it's like 1% rule of thumb. If you have credit card debt or any other debt that you want to pay off and get that rate down, now's the time to do it.
That makes sense.
So something too, because we're about to go through this personally. So when somebody is, maybe they're not completely ready to buy, but can they come to you, maybe get pre-qualified, because you run their credit at that point, and it doesn't count against their credit score, right? Because it's not a hard pull.
Right, we do a soft pull. So.
Is that something that, so like I could come to you and we could do that, and then we could lay out a plan to get where we want to be? Is that something that you recommend?
Yes, absolutely. Yeah, it's free, doesn't cost anything. You don't have to, gather all your documents to get pre-qualified. All you have to do is complete an application. I do a soft credit check, so it doesn't show as a hard inquiry and it doesn't affect your score. But yes, absolutely. I would say that I had a client not too long ago. She did it, and when I went over her liabilities with her, because she was trying to plan too, like, okay, I think I'm gonna pay this off before we really get into it. When we were going through her liability, she said, that credit card balance is like double what it should be. And her credit card was stolen. And they had gone in and changed all of her notifications, like text notifications. She had no idea. So it's just good to be prepared. And like a lot of times people don't know if there's any kind of medical collections on there or if somebody's reporting them past due. So it's just good to have a plan. So yeah, if it's free, it doesn't cost anything. It costs like 10 minutes of your time.
Yes, because Jordan's quick. That's what I like about the clients most recently. It was taking forever for them to get their pre-qualification letter, and they wanted to make an offer, and I was like, no.
It was like a Saturday they called. I was like, yeah, I got my computer.
I was like, please call Jordan.
I tell everybody I don't have a life. I always have my computer with me, so if you need me, just call me.
It's kind of like being a real estate agent.
Yeah, it's kind of like being a real estate agent.
Yeah.
Like I just do whatever. I bring my computer and I can work from wherever. So, yeah.
Pros and cons of what we do.
Yeah. Yeah, because what's a famous joke? Like you can't, like I got into real estate so I would have a more flexible schedule. And it's like, yeah, right. Can't do anything.
I'm flexible to be wherever I want, but I have to be available.
Right.
24/7.
Yeah. So.
Understood.
Something else that I wanted to ask about, because I have, especially in this market, we have a lot of people looking for investment properties, second homes. What are the options for loans for that type of purchase?
So we do have your normal second home investment purchases, 20% down. I think I have a lender that will offer 15% down, maybe even 10% down on a second home. But the only thing with that is your rate's going to be a lot higher. With investment property purchases, if you're an investor or want to become an investor, and if you have 20%, we can do what's called a DSCR loan, and that's a debt service coverage ratio loan. And basically, what that entails is if the proposed rent, so we will get an appraisal and we'll get a rent schedule, and if the proposed rent covers the PITI, so your principal, interest, taxes, and insurance, and any HOA, if the proposed rent covers that payment, then they don't have to qualify anywhere else. Like, they don't have to provide pay stubs, income taxes, nothing. So that's what the DSCR program is, and that's available for investment purchases. But I also have done it on investment properties that were refinances, so they could buy more. So I've taken cash out of an investment property with that DSCR loan for them to take that cash and buy another property, or to fix up their other investment property. So, and the client doesn't have to qualify, which a lot of times, as you know, if you're self-employed, you're writing off stuff, or if you got rental income, you're writing off all the expenses, not to show how much, rental income you truly have. So it's a really good product for investment properties, especially down here at the beach.
Right.
So, and if they have a lease, we can take that into account as well.
And one thing I've talked to you about before that I didn't know, we have a house listed that has a 4.25% assumable mortgage. It was a VA, but I didn't know until after talking to you that they don't have to have that VA entitlement to qualify to take over that assumption, as long as the seller is willing to lose their entitlement.
Yeah, so the VA loan is tied to that house. So their entitlement, and in your case, that you had two veterans. So one of the veterans' entitlement was still tied to that house. So they had this other one to use. So it's a tricky situation, but you had the perfect situation for it, where a non-veteran could assume that VA loan as long as the veteran was okay with that entitlement staying tied to that house.
Yeah.
It's pretty cool.
But I mean, when you hear it's a VA assumable, you just figure you have to be a veteran and have an entitlement. You don't. So that's,
yeah, you don't. Exactly right. Yeah, and I'll also say something that you probably run into a lot is self-employed people. And like I said earlier, self-employed people write everything off. But we have a bank statement program where they can provide either 12 or 24 months, whichever is better, and it can be personal or business. And we average out the deposits over 12 or 24 months and use a ratio. Usually it's like 50% expense ratio. We can count that as income. So I had a client that got denied conventionally because he was self-employed and his tax returns were not it. But he provided his business bank statements and he had over $150,000 per month. Like, that's how big of a difference it can make.
wow.
Yes, because it's scary being self-employed and then thinking about getting a loan. And I had somebody, one of the contractors working on our house or something, and he was like, I'm going to have to stop writing things off for a year. Like, they trying to think ahead. And so that's a really good option.
Yeah, as long as you're depositing the money into your account. And like I said, it could be personal or business. And depending on what type of business you're in, depends on your expense ratio. If your accountant says, hey, you really don't have that much overhead, your expense ratio is 30%, and they're willing to write me a letter saying, hey, Jordan's expense ratio is 30%, I could actually use that expense ratio compared to the 50% and give you more income. So it's a pretty cool program, and it's great for self-employed people.
One last thing I want to talk about is people find it very frustrating, and I haven't run through this with you as much as other lenders, that you're constantly coming back needing more and more and more and more paperwork. Like if they got a deposit of $1,000 that grandma gave them, they need a letter. So can you go over like what documents are generally needed?
Yes. So typically when I am sending your file up to the underwriters, they want a 30-day pay stub. So pay stubs cover a 30-day period. they want, I would say your last year W-2s, but if you want to provide 2 years of W-2s, and then 2 months of bank statements and all pages of bank statements. Now, if you need bonus, or if you receive bonuses or any overtime, they like to see a year-end pay stub to see how much you got that year, making sure that you receive it. So that's your typical, your basics items. Now, if you have any deposits in your account that exceed 50% of your gross income, they're going to question that. That's where that comes in. But typically what I do is I send the basic package to the underwriter, and they'll come back with the conditions like, okay, we'll need this, and then that's it. But what I found going back to the first thing we talked about, as a broker, these lenders are typically wanting your business. They want to do it quick for you. They want to do it fast for you so you come back and use them. So they're very good to work with, and they're very efficient, and they're very quick. And so when they do come back, if we hop on it, it can go quick. And I tell everybody that in the beginning, like, okay, if you'll work with me, I may ask for a few different items, but if you provide them and don't question why, this will fly through. So we try to get everything up front, but obviously as you provide things, we may have questions on them, but we typically try to do it pretty quick.
Yeah, I had a different lender call this morning. These people are coming from out of town, so they have a lender that they've used in their area. And he goes, this has gone really smoothly because you actually send me the stuff I ask you for. Yeah. And they do as well. And so, in 28 days, we have a closing, and it was quicker than what the buyers wanted, but it was really what the sellers were looking for. So it all worked out.
As long as people, that's why I tell everybody, if you can just provide it, there's a reason why they're asking for it. They're just not asking for it
to aggravate you.
Right. And if I think it's crazy, I'll argue with it before I ask you for it. So just go with it. It only takes 30 days. Just be with me for 30 days and then you'll be free. So
good.
Can you let people know how to get in touch with you if they're interested?
Sure. I'm available by phone, via text. Call me, 910-840-1248. I have social media. My Instagram handle is Jordan Carter Secure Mortgage. And my email address is jordan.carter@mottomortgage.com.
Thank you for watching this episode, and we would like you to stay tuned for more coming up in the future.